All right, everybody, we are looking at a great opportunity in Salesforce CRM. They had earnings last night, and top line revenues were really good. They beat what the expectations were. However, they lowered their guidance for the first Q of 2020, which put a little bit of a hurt on the stock today. It's down 3.5%, not a big deal, but stock is down. When you dig deeper into the numbers, into the earnings report, though, we see that even though they lowered guidance for the first quarter, they actually kept guidance for the entire year of 2020. They did not lower it. So this seems to be, both from a fundamental and from a technical standpoint here, a very good opportunity, a very good entry. So you can see Salesforce had been trading at up near its highs, and on the news today this dropped down right to this area right here where this blue line and this red line are converging, the blue line being the 200-day moving average, the red line being the 50-day moving average. So that is a really opportunistic entry point, not so much for an immediate rally back in the stock, but more so as a backstop, meaning, okay, it's trading there, big support, we'll see if it breaches, but it probably should hold as support. So what you're looking at right here is a daily chart, and you can see that big support there. Now watch the intraday trade here. I'm going to change this over to a 1-minute chart. Okay, so we're just looking at the trade today, and look at this big yellow line here. This is volume. Okay, something that we love to look at, this indicator for volume. And look where all of this volume is. It's right at that number there, right around the 155 to 156 area, right, coinciding with exactly that area we were looking to do something. So now that earnings are past, the unknown is behind us, and the stock can trade more off of just fundamentals and technicals and not that outlier news of earnings. We want to take advantage of that. And what I'm looking to do here, and what many of our students got filled on today, was selling a put spread, basically an at-the-money put spread in CRM going out to December 13th. Now you may ask, why are we selling a put spread as opposed to maybe buying an upside call spread if we think that the stock is going to rebound? Well, remember, this support here doesn't necessarily mean that the stock is going to rebound. It's just as much in line that the stock maybe just stops falling there. So we're selling this at the money put spread, and what we did was we sold the December 13th, so next week, the 155, 152.5 put spread. And we were able to sell that for about $1.05. Okay, we're using these big technical spots here, not only the volume, but the 50, the 200-day moving averages, okay, as that backstop. So if we were to hold this all the way to next week expiration, which we won't do, more than likely, but if we were, our break even on this would be our short strike of 155 less the credit. So 153.95 is our break even. Love our chances on this. Love the rationale behind selling this put spread here. Again, you dig deeper into these numbers, and the numbers that Salesforce reported were not as bad. I think this is a bit of an overreaction in the marketplace, and we're looking to take advantage of it. If you have any questions, anybody at any time, feel free to call in or email myself, Scott, or Mike, or Charlie, or any of the instructors here, and we will certainly help you out and explain our rationale. But thanks for listening in, everyone.